This conference will now be recorded.
First thing, I need to congratulate all of you to reach to this stage, and it's not so easy. And I have been seeing most of your work, whatever assignments I'm giving, whether it's right or wrong, that's a secondary. But all of you are making an attempt and able to complete. So that is something you have to see the curve, right? And I'm sure definitely there's a lot of things you would have learned in this class. I'm not trying to praise myself, but I can see you, all of you were putting sincere effort, asking doubts, sending my assignments even in the middle of the night or early in the morning, calling me up and asking, sir, how to do this, how to do that, messaging me, asking, sir, please tell me where I went wrong. I mean, that shows the urge for you to learn and make it right. That's fantastic. And if you have the same attitude, definitely you people will be a great financial analyst thing. Yeah, I know a lot of people have messaged me, even called me, but I've not been so responsive. I've not been very responsive. Okay, because been a hell of a work, a lot of time being in meeting discussions. So don't think I myself been 100% responding to your queries, but wherever I was able to, I have done my best. Okay, so we are here trying to discuss the last two topics of what we have been doing it. Let me explain clearly one by one. But as I said, your financial modeling won't stop here. There's a lot more to this dimensions. Okay, but at least the basic level, you have a very strong foundation. Okay, let's get it and start solving the first one. I will pick up this forecasting revenue. Yeah.
So just one question. When is the exam again?
Wow. All this time when I was talking, the only thing you had in your mind was exam. Okay, exam is on Wednesday, 4:30 p.m.
Yes, sir. Thank you.
Yeah, which was informed in the previous class. Somebody asked for the sample questions which I have forwarded, and I have mentioned even in the previous class. It's going to be Wednesday, 4:30, and tomorrow 4:30 I am still available. I will keep myself free for that 4:30 to 6 for any kind of doubt clearance or any kind of revisiting the topics. The platform will be open. Anybody just put a message. I can come online and I can uh, train you on any particular topics which you're not aware. So 4:30 to 6 tomorrow is dedicated for you people again, which is a doubt clearing class, which happens in every batch. Just before the exam, I always keep that window open, and anybody wants to discuss with me or interact with me regarding financial modeling, you can do that. Here, the forecasting revenue. This is Impal Mamico Phone IR Limited. Okay, so what exactly are we supposed to do is we're not supposed to find any income statement, balance sheet, or cash flow. You're just supposed to calculate the revenues. That's it. So it's just the top line of the business you're supposed to find. See, the top line itself is such a huge, but then you need to understand the business, how the business works, the logic behind calculating the revenue, how a telecom industry can calculate revenue, right? So every company calculates revenue in a very different way. Bank does a different way, retail does it in a different way, a franchise does it in a different way, and now we'll see telecom industry, how does it do it. I'm not saying all the telephone industry will do the same way, one of the case studies. So let's go one by one and see where you went wrong. And where you went wrong, please just put a message in the chat box, so at least you'll know where you went wrong. Let's go one by one. What's the summary here? To forecast revenue for Mpal. Background information: Mpal has a revenue of 60 billion in 2005. Mpal, being a leading telecom operator in India, has three revenue segments. What are those three revenue segments? One is the mobile services, fair enough. broadband services, and equipment sales. Three services are there. Okay. Let's go focus on the first service. Mobile services had 18 million subscribers at the year end of 2016. So let's me go into the template. All right. It starts from 2006, completes at 2015. That's something which I need to know. They have given a template of mobile service, broadband service, equipment sales. They have given the questions I need to understand. The minute there is a beginning subscriber, there will be a ending subscriber. Okay, so that means maybe there is an average involved. I told you whenever there is a beginning and ending, there could be involvement of averages. Okay, gross addition, churn rate, average subscribers, ARPU, average revenue per unit, revenue from mobile service. This is how I am analyzing. You also have to start thinking in this way, and then start solving the what is there on the yellow box. Many people will just go straight away jump onto yellow box. Don't do that. Have patience and look at what they have mentioned. Everything in millions except otherwise mentioned. So keep that in the mind when you are calculating. Okay. Mobile services had 18 million subscribers at the end of 2006. So 2006, the end subscribers is 18 million. There were 9 million subscribers at the beginning of 2006. Okay, it's just a data entry with 1.8 million disconnections. So that means I've already explained what is churn, means disconnections. So out of 9 million people, 1.8 people shifted to Geo, Vodafone, or wherever they wanted to go. So that is your 1.8. And 10.8 million gross additions. Okay. So other probably new people or they would have shifted to MPAL. So 10.8. On analyzing the subscriber data trends, analysts expect MPAL's gross addition to be 40% of the opening subscribers in the year 2017. Okay, fine. What should I do, friends? What does it says? On analyzing subscribers data, an analyst expects gross addition to be 40% of the opening subscribers. So that means gross addition will be 40%. That means your beginning subscribers of 2007. Okay, fine. So that means the beginning of 2007 will be equal to ending of 2016, and additions will be 40% into 18 million. Agreed? Did you get my point? That's your addition. Let's get into churn rate. 40% of the openings, and this growth will decrease by 5 pps, means 5% every year through 2010. Okay, so this will be equals minus 5%. Okay, 35, 34, 33 up to 2010, and then thereafter stabilizes at 25%. Okay, so that means thereafter it stabilizes after, it will be equal. Please tell me if you didn't follow it. You want me to repeat? Then the churn rate is forecasted to be 20% of the opening subscribers. So that means this will be, churn rate will be 20. And this is, it will remain same for all the years. Okay. and it will be 20% of opening subscribers. So this opening is 18 million into 20%. How do I calculate ending subscribers? Can anyone tell me the formula? Very good. So it will be beginning plus addition minus disconnections is 21.6. What happens to 2008 will be same as the 2016. But then I can drag it. I can drag it. This also same. This also same. Until here it's understood. Sir, I went wrong here. Understood, sir. Repeat, sir. I will repeat. Which part of it you want me to repeat? And then it says average subscribers. So it's a direct one. Equals average of beginning, comma, ending. Close the bracket, ending. They only have asked for average. We will give them average. Then they've asked for average revenue per unit. So what have they given in the formula? Average revenue per user is 370 rupees in 2006. Okay, 370. Looking decreasing at HTD and ISD rates, you estimate will reduce rupees 10 per year till it reaches 330. Okay, this minus 10. So every year it will decrease by 10. 360, 350, 340, 330. That's it. After that, it will remain same. That's what is given in the problem. Revenue from mobile service, selling price into quantity sold. Simple. Was it difficult? Was it confusing? Was it not straightforward? Anything? Anything missing? But don't you think? Is it per?
Sir,
Yeah.
yes, yes, you are right. It's for per month, so it will be multiplied by 12.
Yeah. Thank you. It is correct. Into 12. So I was wondering why so less. So it will be for 1 year means into 12. Anyone got this answer? Great. Very good, Rinku. Meghna. Okay. One of you is asking to repeat again. Who is this? Janvi. Janvi, which one did you not understand? I will repeat. Not a problem. Okay. I think churn rate, sir. Okay. So what have they given? Churn rate means what? Disconnections. If you what have they written? The churn rate is forecasted to be 20% of the opening subscribers. So that means every year it is 20%. And then how did I calculate the churn rate? Because they said 20% on the opening subscribers. So what did I did? 18 million into 20%. That is 3.6. And if I drag it, 4.35, 5.5, 5.7. Whereas your additions is 20%. So what I did equals 18 million into 40%. And then I dragged it. And how did I do opening subscriber is equal to the previous year ending subscribers. How did I calculate ending subscribers? Opening plus addition minus disconnection. And if you just drag it to the right side, automatically it will calculate because it's a relative referencing. Try this, go through the recording after the class. So we have done with the mobile service. It was fairly simple and straightforward. Let's get into mobile service. According to Telecom Department, the broadband subscribers in India are forecasted as, so broadcast penetration million in users, 5, 9 million, 15 million. Okay. So that means, what should I do? According to Telecom Department, the broadband subscriber in India, not MPAL, entire India's subscribers is this much. So that is what is a market sizes. Okay. So I have to calculate based on the market size, how much is MPAL share. Based on that, you will know how to calculate. So 5, 9, 15. So 5, 9, they only given the thing 5, 9, 15, 18, 20, 21, okay, 22, 23, 24, 25. Then the market share. MPAL has 10% market share in 2006. Okay. And then, which is forecasted to grow at 5% annually until it stabilizes to 25%. This plus 5%. So it'll be 15, 20, 25. And then stabilizes to 25% rest of the year. Then what is the beginning subscribers? Now tell me, how do I calculate beginning subscribers? Have they given beginning subscribers? MPAL has 0.25 million subscribers in the beginning of 2006. The churn rate of broadband is 20% of the subscribers at the beginning of it. Okay, they've already given 0.25. Churn rate is how much? 20%. 20%. And here it will be beginning subscribers into 20%. That is what they've given. That is 0.1 million. What about additions? They're not given anything, right? ARP revenue brand name. Okay, so that is okay. 20% of the subscribers. Market share. Okay. How do I calculate ending subscribers? Very good. Very good, Meghna. So ending subscribers will be market share into market size. And what is the formula for additions? Gross additions, what is the formula? Ending share minus beginning plus equals minus beginning subscribers, 0.3. Absolutely correct.
So,
If you
can we do for addition beginning subscriber into market share? Because I got the
for
same answer.
okay, if you are getting the same answer, you should be able to. But check for all the other years. Are you getting the same thing? The remaining years for churn rate is 20%. and then your beginning subscribers will be equal to the ending subscribers of the previous year. Addition. And then I think I should be able to drag this to the right. Have you all got the same answer? Can you check? Others have become silent. If you didn't understand, please ask me. I'm just formatting, that's it. Then you have average subscribers. Same thing as the previous one, average, beginning, comma, ending. Same steps as the yesterday's, on the top, what we have done. Then you have average revenue per unit. What have they mentioned? Broadband service is 930 rupees for 2006. It's going to be decreased 10 rupees until 2015. Okay, so it is 930. And this will reduce by 10 rupees until 2015. That means till the end. So 840 is the last price. So finally, revenue from broadband services 930 into 0.4. Of course, multiplied by 12. Take to the edge of it, drag it. We have done this. Anybody got this answer?
Sir, I didn't get the same addition.
Uh-huh. So then I have to go with this method only. You didn't get how I got additions?
Yes. Means equal to ending subscriber plus churn minus beginning subscriber.
It is actually beginning plus addition minus churn equals ending. What are we
Yes.
supposed to find? We're supposed to find addition. So addition, sorry, it's not minus, it's equals. Yeah, this is the correct formula. So here we want churn equals ending. Sorry, we are supposed to find add. Add is equal to ending plus churn. Beginning will go the other side, minus beginning. You got this?
Yes, sir.
A lot of people would have done the same thing, like add is equal to ending minus beginning plus churn. Still you should get the same answer. It's the same thing. So find out that. Now the last, equipment sale. Empal sells network equipment to all new subscribers at rupees 900 for a new brand connection and 2000 for a new mobile connection. The equipment earn 20% margin. All right. Sells a network equipment to all new subscribers at 900. Okay. Revenue for broadband connection, revenue for mobile connection. Right. So this will be 900 for what? For new broadband connection. 900 into new broadband connection. That means only additions, right? And the other one is 2000 rupees for the new mobile connection, 10.8. Is this clear what I did? Okay. But for calculation purpose, what I will do, 900, 2000. So 900 into 0.3 plus 2000 into this one, 470. Guys, tell me if I'm doing correctly or anything mistake. I've done some mistake here. Yeah, I think that's a mistake I've done. 2000 into 10.8 plus 900 into 0.3. Did you understand this equipment sale? What I did? If not, let me know. I will repeat again. Okay, at least just respond. And finally, what is your total revenue? Total revenue will be equipment sales plus broadband sales plus revenue from mobile services. Take to the edge of this cell and drag it. This is it. Anyone got till here?
Sir, so in question why it's given 20% margin?
One second. The equipment can earn 20%. That's a good question you asked. Anything else is pending here? Uh, these equipment earn 20% margin. It's very incomplete. These equipments earn 20% margin means 20%. It doesn't make any sense. Maybe it's just an information for us. These equipments earn it because this doesn't make any sense.
No, like what was I thinking, like that revenue from income sales, like what we does in that depreciation plus like 2006 it's the revenue, but for 2007 it's that that year revenue plus 20% of that previous year.
I think it's just an information. See, they're selling what? they're selling to all the new subscribers 900 rupees. A new brand, they're selling it for 2000 rupees. So probably what it means is out of 900 rupees, 20% is what profit for them. Remaining is cost. So out of 900, 9 to 18. So 180 rupees is the margin for them. Something like that. But for the revenue at this point of time, we don't need this. Or maybe the question is incomplete. The reason is they only picked up the revenue forecasting. After that, they have not told us cost, inventory, assets, liabilities, nothing. So probably they should have cut till here. Anyway, at least this problem you understood. I'll take your feedback. I'll check if the question is cut not appropriately. I have to check.
No, sir, you are correct, but it will be included in income statement, like
Okay,
20% profit.
correct. But why do we need it for this problem? Because we're not doing it, profit and loss. We didn't wanted this statement. Okay. Any doubts in this? No, we're leaving a margin. We're just ignoring margin at this point of time. Can you explain the equipment sales? Okay. Yeah, I was hoping someone will ask me, because if a lot of people are keeping silent, maybe they did not understand also. I can. Okay. Good, you asked me. See, what they're saying is 900 rupees for the broadband connections. The other one is 2000 rupees. Basically, what happens when you buy, say, broadband, when you buy internet connection, it's not free, right? It could be labor charges will be there, or it could be modem charges will be there. It's an equipment. Wiring will be there, wiring charges. So they're saying any new subscribers from 2006, they will charge one time one time installation fees or something, or equipment fees, rupees 900. Same thing, if you buy a mobile connection, they will charge one time 2000 rupees. Okay, they have not given us what is a 2000 you will get it, but we'll just assume that they will charge. But remember, this is all for new subscribers, not for the existing subscribers. So then what I have to do in the broadband, how many people newly added in the year 2016? Obviously, I cannot go for beginning, ending, or disconnections. Where should I go? These are the new connections, additions. So I should charge them how much for broadband? How many people have newly added in the year 2006? 0.3 million. For those, every customer has to pay 900 rupees plus 2000 rupees for the people who have newly purchased mobile connection. Who are those here on the above? How many people additions? 10.8 million. Each people have to pay 2000 rupees. That's what I have done. But instead of manually doing it, I made 900, I made 2000 for all the years. Then what I did equals 900 into new is 0.3 plus 2000 into 10.8, and I just dragged it. So this much of money they will get for equipment. Then overall will be equipment sales, broadband sales, and mobile sales. When you add up everything, you get 85,995. Of course, it is multiplied by, should I multiply by 12? No, it's anyway it's already multiplied by 12, I think. Is this clear, Shruti? Fantastic. Now we are moving off this. Anybody wants a solve sheet? Let me now get into the training. Training. This is the sheet which I gave you, right? Right answer. Shall we start? Just type 2 for the second case study, or you want 5 minutes break? Hopefully during this process you will learn lot more, and you'll be confident tomorrow any new case studies that comes up, you should at least have the confidence to solve up to 80%. Alright. What is this? Build a financial model to evaluate a business opportunity to take franchise. The minute franchise means what happens? Royalty or commission comes into picture. You don't get full revenue, you only get a part of revenue, and that is what is a franchise. Okay. So these are the products, average monthly sale per month, price per month, commission per month. Let's go into revenue drivers first. Let's go to the revenue drivers. I have already given you this for the 55%, 60%, 70, 75% of that you will get money. And every year, 3% increment. Your price also increases every year by 4%. So how do I calculate? Equals, go to my assumption, average monthly sale per month multiplied by price per month. And this will increase every year by into open a bracket 1 plus 3%. But why to do all that here? I think here it only needs monthly sale, means quantity sold. So it will be equals this into open a bracket 1 plus 3%. Am I doing correctly? Yeah. Into 12, we can do that. Can I do like this? No, price per month is 25,000. So this will be increased by 1 plus 4%. I'll try out something different. See if you're getting the same answer. Can I say 25,000 into 25 into 55% into 12. Can I do this way? I'll add up it. Anyone got the same answer? In the end only I multiplied by 12. Any doubts for this?
Sir, there is yearly increment of monthly sale and monthly price. So we have to multiply it with 12, then increment. Or what you have done is right.
Will it not be same answer? You will get the same answer. Why I did not do into 12 initially is numbers are very big. So even if you do here into 12, you will still end up getting the same answer. Try it out. You should be able to get the same answer. Okay. Can I go ahead? Next one. What I have done is, remember, in this monthly revenue equals, usually what you do quantity sold into selling price. But remember, it's a franchise business. We don't get 100% out of it. Because we are selling that, we are only getting 55% of it. And this is a monthly sale. But if you want to do it for a year, it will be into 12. And that's how I've calculated. Then when you add up all the 5 products, you will get the total revenue. What I have to do is I have to go to income statement, link that with the drivers. Be careful with year 1, year 2, year 3 when you move from one sheet to another sheet, and check. It is year 1. So my revenue top line is ready. Then it says rental. I go to my assumption. The rental rate will increase every year 6%. Okay, but what is the rental? 3000 square feet, 200 rupees per month, and deposit worth 6 months. Okay, that's what they have given. So it will be equals 300 into 200 multiplied by 12, because that is per month, and this will increase every year by 6%. Trainer cost, what have they mentioned? To be careful, these are employees, but there's something called trainer. For the delivery of training of the product, 2 trainers per product needed to be hired. 2 trainers per product. We have 5 products into 2, so 10 trainers. The salary of each trainer will be 9 lakh per year, and they will increase every year by 9%. Okay, that means here there are 2 trainers, 5 products, increase every year by 9%. So it will be equals 9 lakhs into 10 trainers per year. So I don't have to do multiply by 12. And this will increase every year by 90%, 9%. Now we get into employees' salaries. This is the managers, number of staff, sales per month. So what I can do, sum product, number of staffs, salaries. 1 second, I'm getting a phone call. Close it, enter. So it says 3,80,000, but this is per month. I need to multiply by 12. So this assumption multiplied by 12. This will increase every year by 9%. And other operating expenses. Other operating expenses, 15% of the sales. Straightforward into sales. Then marketing, 15% of the sales, even that one. EBITDA, sales minus all the expenditure. Sum of rent, training, salary, other marketing. Please tell me anything until here understood. Don't lose patience, interest at this point of time. Next is depreciation and amortization. Okay, what is their assets? Renovation furniture cost 40 lakh, and this will depreciate 10 years until it reaches to zero value. So 40 lakhs is there, that is here. So equals divided by 10. So 4 lakhs is your depreciation all the years. EBIT will be EBITDA minus depreciation. Okay, if I want to calculate interest, I need to know the total capital. For that, also I need to know what is the debt percentage and equity percentage. Also, I need to know the rate of interest in percentage. So all this only then I can go for interest. Now, let me understand what is the capital required. For that, you have assets and debt. You go here. What is that they've given in the assumption? Point number 17. The setup cost, which is deposit and renovation, can be funded using debt by equity ratio 1.5. I gave you some percentage in WhatsApp. Nobody asked me, sir, how did you get that value? You simply blindly took it. Okay, I was hoping someone will ask how I calculated that. Okay, what is my deposit and renovation? What is my renovation? 40 lakhs. So that means, what should I do? My deposit and renovation is 40 lakhs. Renovation deposit is what? 6 months of my rental. So I go here, income statement, rental is 72 lakhs for 1 year. So can I say divide by 2, where I get 6 months of deposit. You add up everything. So total investment you want 76 lakhs. This 76 lakhs is funded through debt by equity ratio 1.5. How do I convert 1.5 into percentage? Can I write 1.5 as 15 divided by 10? Can I write like this? 1.5 as 15 by 10? Please respond. Can I write this 15 by 10 as 5 3s are 15, 5 2s are 10? Can I write like this? What do you, in the fraction, I'm sure you would have learnt it. What is 3 by 2? That means there are, for example, 5 slices of pizza. You are having 3 out of 5, and your friend is having 2 out of 5. That is the meaning of 3 by 2. Agreed? So what percentage of that pizza you're going to have? So it will be equals 3 divided by 5, and equity will be 2 divided by 5, the remaining, your friends. So if you want to convert into, so multiply by 100, you get 60% of debt, 40% of equity. Clear? So sometimes mathematics also plays an important role. So Excel, maths, financial concepts, everything comes into picture. Everyone, 36 people are there. Please type yes if you understood. Don't just leave it for recordings. A live class is always better for you. If you are going through the recording and understanding and doing, that means you're memorizing the case studies. You only have to go to the recording because you missed out 1 or 2 points here. But you're learning from the scratch through recording, purely you're memorizing the concepts. So don't do that. So we got debt, we got equity. So now, easy now, equals 60% into total investment is 76 lakhs. This much of loan you need. Then equals the end date. You're aware of it. What is the interest? 12%. It's already mentioned. This into 12%. EAI you need. Why do we need EAI? Let me check. What have they given? Loan to be repaid in 6 years. Fantastic. So then how do I do it? EA means PMT. Rate is 12%. Number of years is 6 years, no? Present value is this. 0, 0, close the bracket, end it. And I told you, make it minus. So your principal repaid will be EAI minus interest expenses. And your end debt will be beginning debt minus principal repaid. Take the entire thing. But remember, this 11 lakhs is constant for 6 years. 1, 2, 3, 4, 5, 6. Remaining relative reference, drag it. If you're not understanding anything at this point of time, that means you have not followed it up properly. So end of year, you are paid off loan. I also got interest. Any doubts here? Anything you want me to repeat? I know I've been asking again and again because this is the last class. Don't worry, I won't be asking again for you. So at least whatever I'm teaching, any doubt, let me know. I got my interest. Let me go to my income statement. Equals, where is my interest? Here. It's only for 6 years. And then profit before tax will be this minus this. Tax I've already given 25%. So multiplied by PBT into 25%, or let me type it. So from year one only you have profit. Very good. then this minus this. Finally, you have made this much of profit. Check your answers. Type next for me to go forward. Anyone got the income statement correct? Very good, Shruti. Vaishnavi. So, Meghana. Okay, so good. So if your friends can do it, the others also can do it. Cash I can't take because I have to wait for the cash flow statement. Okay, Madhuri also got it. Very good. Account receivable. What does the question says over here? Account receivable will be 2% of sales. So fine, equals 2% into sales. See what is the problem? I took it from year 0. Careful. So it will be equals 2% into sales. Right. Deposit. Obviously, it was before starting of the business, right? Equals. You have it in asset and debt, which is 36 lakhs, and it did not change. It remains same till all the years. Fixed asset equals 40 lakhs. It remains same.
Sir, there will be no deposit for year 10.
Yeah, yes, but I've still not come there. Assume that we are just starting the business, and at the end of it, we will remove year 10. Because you've already done the end of the case study. I have to do step by step and then come back to the last point. And depreciation will be 0. But in the year 1, remember balance sheet, what happens? It's up to the date. Previous year plus, I can divide here only 40 lakhs divided by 10. And take to the edge of this cell, drag it. And what is net fixed asset? Gross minus accumulated. How do I calculate assets? I will consider cash at this point of time, account receivable plus deposit plus your net fixed asset. I will now go for the debt equals asset and debt. Take the end of the debt, year 0, then equity capital equals 40% into total investment you needed 76 lakhs. That this will remain same for all the years because you have not got any new equity. Retained earnings year 0 will be 0, whereas for the year 1 it will be previous year retained profit plus your income statement year 1 profit after tax. Add up everything. If you got the year 0 matching, so it's a clue for you that somewhere the data is correct. In the year 0 only, if it is not matching, that means something wrong. Okay, that's a clue for you. Then only thing pending for us is the cash flow But until here, any doubts so far? Because if you reach to this stage, we have done at least 7 to 8 times. Almost all the case studies, we have done the same thing. Then the cash flow statement. Okay. This seems to be not at all difficult. Profit after tax equals income statement, depreciation. Always take depreciation from income statement. A lot of people have taken from the balance sheet. Change in AR. The minute you say change in AR, that means you're comparing with the next year or previous year. Should I do current year minus previous year or previous year minus current year for change in account receivable? Very good. It's an asset, right? So when it is an asset, you're going to do previous year minus current year. And what did I tell you? Go here, go to your balance sheet. Previous year of year 0 is this minus current year. What happened? Did I make any mistake? Yeah, it's correct. Add it up. That will be your CFO. Change in deposit. What about these two? These two will have which formula? No, Shruti. Deposit is an asset. Fixed asset is also an asset. The minute it is an asset, PY minus CI, PY minus CY. So equals, go to balance sheet, deposit previous year minus current year. Same thing here, fixed asset, previous year is this minus this. And drag it. Add up. There's something mistake. Equals deposit previous year minus current year. Yeah. Then add up CFI. What about change in debt and change in equity capital? What formula should I use? That's all. It's a liability. CY minus PY. CY minus PY. So debt will be current year of year 0 minus previous year. Same thing, equals equity current year minus previous year. Take to the edge of the cell, right? And I'll assume that and check this, why these things are negative. Can anyone tell why these things are negative? You have debt repaid, which is nothing but principal repaid. 5,61,909. If you observe here, principal repaid 5,61,900. So these are all paid. I mean, money going out of your pocket. So net change in cash, you are aware, CFI, CFF plus CFO. You know, when you year 0, year 0, year 1 will be equal to year 0. Whereas EOP will be beginning of period plus. I'll get back to that. I understand, but you should not do now. Once you complete everything, then you should do it. Take to the edge of the cell, drag it. You got your EOP cash. What happens? You go to balance sheet, click on this, go to your CFS, click on EOP of the year 0, take to the edge of the cell and drag it. Automatically everything is 0. This is the best thing you should be able to see. When you put a EOP, it matches. What a relief for you. Until here it's clear? Anyone wants to ask about CFS? Any confusion in CFS? After I have done 10 years of my business, what else is mentioned over here? Deposit paid at the start will be refunded in the year 10. So what happens? I go to my balance sheet. The deposit at the end of 10 years will be 0. And that in my CFS will come over here. And remember that money is refunded. So the money is coming to me. So obviously it is plus 36 lakhs. And then they've also told one more condition that all receivables will be collected in the last year of operation in the year 10. Thus, receivable balance will be 0 at the end of year 10. So what happens to my balance sheet? Even all receivables will be 0. That also will come under CFS and will add up over here. See, suddenly there's profit of 11 lakhs 35,000. All this time it was negative. Suddenly you got entire money from the customer. So 11 lakhs 35,375. That is also been added. Next, finally, your FCFA, free cash flow. How do I calculate this? This is nothing but CFO plus CFI plus change in the debt. And take to the edge of the cell, drag it. And what is the IRR? Equals IRR, open the bracket from year 0 to year 10.
Sir,
Close the
sir.
Yeah. Tell me. And enter. You got 20 points.
Sir,
Yes.
so how did you get that change in AR? I was having network issues, so I couldn't hear you.
1 second. Wait, hold on. I'll come back to you.
Yes.
Others, did you get how I solved it? The two major things is your account receivable becomes 0, and then your deposit is also 0, and both the money you will get in the last 10 years, in the 10th year. So when you see cash flow statement, your account receivable, you get 11 lakhs on that day, and then that year you'll also get 36 lakhs extra. This also some of them would have missed it out. And then you get to see 20.77. Anybody got? Only one person I got. I don't know. I forgot the name. I'm not going to answer these questions because you can just pick up from the case study and just write down the answer. Yeah, I think Meghna. Fantastic. Okay, great. So one student, I'm okay. I can say I'm a successful trainer for this batch. Okay, because if nobody had done, then that means somewhere I failed to train you guys or make you to understand. So that's more than I'm happy for this batch. Okay, somebody asked me the doubt on cash flow statement, right? You asked me change in debt, change in AR. This is what you're asking?
Yes, sir.
Okay. How did we do it? Same thing. Year minus current year. Any asset value in cash statement, the formula is previous year minus current year. The liability will be current year minus previous year. So that's what I did. So from year 0 equals, go to balance sheet, previous year minus current year. That's how I did it. And the last year in the balance sheet, what they said is that you will receive all the cash by end of 10th year. So you don't need to receive any money from the customer. So I put 0 here. When I put 0 here, that money would be added over here because it's interlinked. And all this time you were supposed to receive, you have not received. That's why it's negative. That last year you received it. That's why you got 11 lakhs. Was that your doubt?
Sir, my doubt was that I'm not getting that year 10, 11 lakh.
So you've not linked it. Or go to balance sheet first. First see if you're getting the same value. 6,54,900, 7 lakhs. Did you get the same value? Did you get?
Yes, sir.
Okay. So when you get this, that means what you have to do is see, I'll show you how to remove this. You would have got this answer 6 lakhs, and you would have got here last one is 12 lakhs. What I did in cash flow statement, what is the formula? Previous year. In the year 0, just take an imaginary year before 0. So what I did equals, go to your balance sheet. Previous year means just take a D column, just below that. It's an imaginary minus the current year, which is year 0. Enter and drag it. You should have got minus 80 lakhs 839. Then what does he says? Entire 12 lakhs you will get it by 10th year. So I made it 0. When I did 0, see what happens to my cash flow statement, 11 lakhs. Did others get 11 lakhs?
Okay, sir, I got it.
Okay. So this is what, my friends, 20.77. So friends, I think we are coming to an end. This is where we part. And one more thing regarding the exam, regarding the tool, the software, any doubts, there's a person by name Yusuf. He's a part of the group, or Mr. Kiran Kumar. He's also part of this group. So anything you have issue with the exam undertaking, or any issue with the results, any issue with anything with respect to exam, you have to communicate with them. My role over here completes, where I will be sharing you the recording. I'll be sharing you this case study, and anything else tomorrow. I said I'll open a window from 4:30 to 6. Anybody has a doubt, anything wants to verify, clarify, revisit some concepts, I'm there for your doubt clearance. Otherwise, you straight away sitting on Wednesday 4:30 and attempt the exam. So I wish you all the best. I had a great time training you people, and wherever you are, wherever you are going to succeed in your career, remember financial modeling would have played a crucial role for your career development. And please do give a good feedback to your HOD or to your department, and what you felt about this course. And definitely the next group should benefit about it. So thank you so much. Have a wonderful evening. Take care.